Well, welcome everybody. Today I want to talk about my list of financially strong stocks. These stocks will rebound the fastest. They have already started to jump. And it's interesting because these stocks are the big boys. And the reason I like them so much is that the old adage, the bigger they are, the harder they fall. Well, these stocks also will drop faster than the market. So they're great. They're great stocks to trade. And both going up and down. And I'm going to show you that later on. Again, my name is Dale Brethauer. I've been a trader for 35 plus years. I've made my money this way. This is how I make my money. I'm a hedge fund manager. I've been a guest speaker at MoneyBlock, Trade Monster, of course, Investors Inspiration, Metastock, The Money Show, Value Charts, and MicroQuant. I've also written 3 financial books, and I am the founder of what I believe is the very best educational website available today. We specialize in credit spreads. I believe credit spreads are the best strategy to use to bring in consistent monthly income. The reason why I get a big kick out of teaching right now is, it's time for me to give back a little bit. I'm not teaching because I don't do. I have done. And now I get a big kick out of teaching my mentees how to be a success in this very difficult arena. And that's why I'm here today to talk to you. What I'm going to show you is how these stocks outperform the market. That financially strong stocks, how I pick them is I look for cash from operations. It's very easy to do on Yahoo Finance. I'm going to go over my list of 2020 financially strong stocks. There are 20 of them. If you all have clip art, I'll keep the slide up there for a while and you can clip it or you can screen save it. Then I'm going to go over the best ways to trade that and show you some examples. We'll finish up by going to my website and I'll talk to you about how you can become more involved in our community. But let me begin, first of all, by showing you that financially strong stocks outperform the market. This is a chart that I put together on bigcharts.com. The black line is the S&P 500. And you can see over the last 10 years, the S&P 500 has performed very well. Very well. These are just a random list of 5 of the financially strong stocks. We've got Amazon, Visa, Microsoft, Home Depot, and Danaher. And you can see that Amazon outperformed the market as much as 1,600% over the 10-year period. And then here is Visa, Microsoft, and Danaher, and Home Depot in here, all doing a lot better than the general market. So how do I pick these financially strong stocks? The first thing I do is I go and I pick the 10 most profitable market sectors, and I go on to, I actually use Thinkorswim. I'm not affiliated with them. I happen to believe they're one of the best trading platforms available today. What I do is I look at the ETFs for the market sectors, and from there I can determine which ones are performing the best. So I want to pick the best, first of all, the best market sectors. Then I want to find the companies within those market sectors with a positive trend of cash for operations for the last 4 to 5 years. That's going to give me a list of between 20 to 25 stocks. It's a very small but a powerful market basket. And I like the small basket because I know these stocks. I mean, I could close my eyes and I could tell you what the charts look like. You get to know these. I mean, there's 7,500 publicly traded corporations out there, and I'm focusing on 20 to 25 stocks. So you really get to see how they're reacting. Okay, this is a list of the 10 best market sectors, and you're taking a look at a chart of financial services right here. And this is a recent chart, so you can see it was sloping up, but then the coronavirus tanked everything. Of course, the market's coming back now, but so this shows a very strong market sector. Financial services is a strong market sector. So then what I do is I go through and I pick the very best of that market sector. And for financial services, it happened to be Visa. Okay, well, how did I pick Visa? Well, first of all, I want to look at their cash from operations. The old adage, cash is king, is very true. And what I'm looking at is the financial statements, the net income statement, and the statement of cash flow. See, businessmen, CEOs, CFOs, they're not worried about the net income statement. They don't worry about that. All you hear about in the market is earnings per share. It's the earnings season. How did earnings per share do? Well, earnings per share is about half the story. It's not the amount of money that the corporation made. I want to see how much money the corporation made, because the companies that have made the most money will move the best versus their competition, because they can invest in themselves. They can do R&D, they can do more marketing, they can just do more things than their competition. Now, the income statement starts out with revenue. You take off your expenses, you take off depreciation. Depreciation is an allotment the government gives corporations to invest in themselves. And they allow corporations to take a certain percent per year off of their revenues before they pay taxes. Okay, so they pay the taxes and then that gives them the net income. Well, they actually made this money. They just didn't have to claim it. Okay, so the statement of cash flow starts where the net income or earnings per share begins, and they add that depreciation back in. You're going to add or subtract any working capital. You're going to add cash from others to give you the king, cash from operations, the king. All right, so let's go over to Yahoo Finance. Yahoo Finance, you can see this is the cash flow statement. There's the net income, adding back in the depreciation, changes in working capital, okay? This is what I consider the bottom line. What I'm looking for is a trend. The last 4 to 5 years, positive trend. Caterpillar has that. 2016, $5.6 billion. The next year, 5.7. The next year, 6 point, it's rounded off to 6.6. And then 6.9. This is what I'm looking for. This is a very strong corporation that has a lot of money that will continue to be strong in the future. Can't believe these ads that could pop up all the time. here's my list. There's 20 of them. And I'm going to leave this up for a while so you can if you need to write them down, I mean, the symbols are very easy. If you can clip it, it's easy to clip it. If you can screenshot it, you can screenshot it. Investors Inspiration also will be putting this on YouTube, so you can go back and pause it and grab it. But the 20 are Abbott Labs, ABT. Abbott Labs has been on this list for quite a number of years. Amazon has too, AMZN. AT&T is a newcomer the last 3 years. Caterpillar used to be on it, dropped off. Now it's back on it. Costco, COST. Cummins Engine, CMI, Danaher, DHR. Google, GOOGL, Hershey, HSY, Home Depot, HD. Kimberly-Clark, KMB, Johnson & Johnson, J&J. McDonald's, MCD, Medtronics. Medtronics is, I'm very interested in them right now. They are the biggest fabricators of ventilators, and their stock has been rebounding nicely. MDT, Merck, MRK, Microsoft, MSFT, PepsiCo, PEP, Procter & Gamble, PG. My nephew happens to work for Procter & Gamble, and this is an inside trader, but he's the head of marketing for P&G, and he said they're going to have one of the best earnings this year, or for the longest time. So, but the effect of earnings is not the earnings per share, because that's in the past. But what people are looking for is what's going to happen in the future. Visa, V, and Verizon, VZ. Okay, let's just take a look at Caterpillar. And you can see that this first one, this was a time to short Caterpillar. Here's a time to get long, short, long. Let's take a look at it right here on July 1st of last year. If you would have shorted Caterpillar and then bought it back right down here, that's a 19% return. Then here, if you would have bought it and sold up here, there's a 31% return. Then if you sold it here and bought it back down here, that's 18% return. That's a total of 68% profit in 9 months. Now the SPY, or the Standard & Poor's 500, last year had a great year. It returned about 15.2%. Here's one way of trading a financially strong stock that profited 68% in 9 months. Now, so how do I know that this was overbought and these are oversold? And you'll see these lines on there. This is the regression channel. The regression channel. Okay, the regression channel helps me to see when things are overbought, oversold. The line in the middle is calculated by taking 50% of the price above and 50% of the price below. And then you have plus or minus 1 standard deviation, plus or minus 2 standard deviations. One of the nice things about having a small market basket is I know that not all corporations will respond to the plus or minus 2. They might respond to the plus or minus 1. Okay. Okay. Bill had a question on where do I find a regression channel. Bill, like I mentioned earlier, I have Thinkorswim, and Thinkorswim, what you do is you go to Edit Studies, and under Edit Studies on the left-hand side, you scroll down and you look under Standard Deviation Channels. You double click on that and it automatically then will put it on your charts. I used to calculate this by hand and I know the power of this. So Bill, it's done for you nowadays. It's a nice thing to take advantage of. Good question. Good question. Okay, the regression channel is based in probability. And here's the regression line, which by the way is an excellent trend line. But here's the plus or minus, minus, plus 1 standard deviation. 68.2% of all prices will be contained statistically within that band. Here's plus or minus 2 standard deviations. 95 plus % of all prices will be contained within this channel. This is a very powerful tool, very powerful tool. Let's take a look at another example. We looked at Caterpillar. Let's take a look at Hershey. And you can see that Hershey reacts. Here's a reaction right around the -2, goes all the way up to the +2, comes down to the -1, comes back up to the +1, down to the -1, and so forth. And this is how you trade. This is how you know when a stock is overbought, oversold. Yes, occasionally you will get something that comes down below here, and that's a real outlier. But the nice thing about that is it will, at some point in time, revert back to the mean. This is the mean. Okay. Now, for the Hershey example, if I bought here and sold here, sold, bought, sold, that gave me a total for 9 months of 47%. That's a heck of a nice return. Again, with the SPY only bringing in 15.2%, which is SPY had a great year last year. But here on June, you knew that it was down around the -2. This is a great opportunity to buy. And if it does go down below here, you can buy some more. Okay, and if it goes down below that, you buy some more because you know it's going to revert back to the mean. You know it's going to revert back to the mean. Here we bought at 133 and sold 3 months later, actually a little less, actually about two months and a week for 20%. That's almost, I mean, that 1-2 months period, you could say that you had a great year, and you did. The average profit in 2019, last year, on the financially strong stocks, just buying, not selling short, just buying. A lot of people don't like to sell short. So I'm just looking at the buying opportunities for that. Was 37% versus the 15.3 for the market return. Of course, these are past performances. There's no guarantee for future results. Okay. 37% isn't bad. Let's kick that up a little bit. Let's kick that up a little bit. And how we're going to kick that up is we're going to look at this period of time with Hershey, okay? Trading this period of time right here, where you would have bought down here and sold up here. And that would have been a 14% return, which is a nice return. And that was 1, 2, about 3 months, okay? what we're going to do is, as this trend moves up, we are going to sell credit spreads. When the market's going up, we want to sell bull puts. The operative word here is bull. Bullish, a bull put is a bullish strategy. And what you do is you sell an out of the money put, and then you're going to buy one further out of the money for protection. The beauty of the credit spread is that there's three ways you can win. One, if it does move up, winner. Two, if it goes sideways, winner. Three, if it comes down but not below this area, winner. Now you take that versus either buying a stock or buying a call, time's running against you. With a credit spread, time is running for you. Let's see, Austin's saying, is it similar to the RSI indicator? Not really. Not really. It's the regression channel is similar to I would say it's similar to Bollinger Bands, but Bollinger Bands happens to be a little closer look-see, where there's the regression channel. You can look over different time periods and see what's overbought and oversold. And Bollinger Bands is usually you have to either choose one standard deviation or two standard deviations. I just like the regression channel. It's similar to Bollinger Bands, not quite like the RSI indicator. Okay, another good question. Okay, just the opposite of the bull put is the bear call. In the bear call, once again, the operative word is bear. This is a bearish strategy. This is like selling the stock short. This is like buying a put. Okay, we're selling a bear call spread. And what we're doing is we're selling one here out of the money and buying one further out of the money. And once again, if it goes in our direction, that's fantastic. If it goes sideways, that's fantastic. If it comes up a little bit, that's okay, as long as it doesn't go past here. Okay. Okay, so let's take a look at that Hershey chart and see how we could have utilized that. How do I know when to put on a bear call? Well, the first thing I look at is a measured move. And all of these terms are explained in great detail on my YouTube channel, and I'm gonna give you that in just a second. As a matter of fact, let me see if I can open up the chart or the chat and paste that in here right now. I cannot. Okay. Trish, if you can do me a favor, when I get to the chart that has the YouTube address on there, if you could copy that and type it in the chat box, I would appreciate it.
Yeah, I can do that for you, no problem.
Okay, great. Thank you very much. But a measured move is you start at a low point, and then it makes a high, and then it pulls back. And notice that this low is a higher low, and then you make a higher high. This is a bullish measured move. Okay, that's a good entry point. Then you continue on, it makes another measured move, good entry point. You'll notice here's a measured move, good entry point. Measured move, good entry point, okay? So now I know that with the regression channel, I know that this is oversold. So I'm looking for a trade to the upside. I get a measured move to the upside, it's time to get in. I can get in again. Now, the question is, when do I get out? Okay. The measured move helps me, the regression channel and the measured move help me to get in. But I want to maximize my profit. I want to maximize my profit. And that brings in the Fibonacci's. Okay. Fibonacci's. Once you have a measured move, you can, again, on Thinkorswim, you can come right up here on the measured move and click with this measured move, and it will automatically put in the Fibonacci's. And I'm looking at the Fib extensions. I know a lot of people look at Fibonacci regressions. I was taught many years ago that the Fibonacci extensions are what you want to use. Now, the Fibonacci's are based on a number sequence, and the number sequence is 0, 1, 1, 3, 5, 8, and basically the current number is derived by adding the two previous numbers, and obviously it was developed by Fibonacci. And over the years, mathematicians have looked at square and square root and reciprocals of that. And that's how they've come up with these numbers. Now, what's interesting about these numbers is Fibonacci's ratios are seen throughout nature. The golden ratio is 0.61, and your bones, the bones in your body, grow in proportion to Fibonacci ratio. If you take the length of your forearm from the elbow to the wrist and divide it into the length from your wrist to your index finger, it will be 0.61. That's the golden ratio. That's the Fibonacci ratio. It's seen throughout nature. So doesn't it make sense that if the Fibonacci ratio, golden ratio, is seen throughout nature, doesn't it make sense that it would hold true for the stock market, which is fueled fueled by fear and greed, human nature. It's fueled by human nature. And I don't know how many times I have put on Fibonacci extensions and watched the market go up and almost touch it by a tick and revert back. It is uncanny. Here's how I'm going to use this. On this first trade, here was the measured move. We get in right here on November 12th. Okay. And it goes up to the 161 in 3 days. Yeah, there was some weekend in there, but anyhow, I got out of that with a bull put, where I sold the 21 February, selling the 135 and buying the 125 for protection, 40% return. Now, a lot of people say, well, why didn't you just sell the 135 short? Why didn't you just sell that and take all the profit? And I never sell naked, if you will. That's why I love the credit spreads, because you've got that protection if in case you get a catastrophic drop, similar to what we just had with the coronavirus. That was such a fast drop that it was great to have protection on there. People that didn't have protection lost a bundle. A lot of people in their 401ks, where they can't get in and out, lost as much as 35% in a matter of a week and a half. That's crazy. It's crazy. Okay. Okay, here's the second measured move. And notice it came to the 261 within a tick and got out. That's our second one. We didn't get very much profit. We were only in there for 2 days. 14.5% in 2 days ain't bad. Okay, then it kind of meandered around, didn't do a measured move, didn't do anything like that. Then we had another measured move here that went up to the 161, and this was a nice one. This one lasted almost a month. Well, actually, only lasted 2 weeks. From January 17th through the 30th, 82% on that little move. And then the last one was right here, and it came up to the 127 right here, and the +2 on the regression channel. Hey, that's time to take profits, okay? And that was a 61% profit on margin. Okay, so you total those all up versus the 14% of buying the stock. During that period, you could have made 14%, which is awesome. Okay, 61%. Let's see if I add these together. Yeah, that's good. That's a lot. That's a lot. It's close to 200%. Okay, and you weren't trading, but 4 trades during that period. The profit trading vertical credit spreads for the market basket that I have totaled 197.5% last year versus the 37% for trading stock, which isn't bad, versus the 15.3% for the SPY or Standard Poor's 500. Once again, past performance is no guarantee of future results. I've been doing this for 35 plus years. This is how I made my money. This is how I make my living. I've been publicly giving my signals for the last 10 years. For the last 10 years, we've been correct 75% of the time, which is unheard of in this arena. This is the 2019 to date return on margin equity curve for all the trades that I put out. These are trades that I'm doing. I am not a registered investment advisor. So when I put out an alert, I talk about trades that I am doing. You have to make the decision whether that trade is right for you or not. But this is an equity curve that goes for every year. I see this kind of an equity curve. Now, the thing you have to remember is you are going to have some losers. You are going to have some losing streaks. This most recent losing streak was because of the coronavirus. However, we have rebounded nicely, and I think that 2020 will end up being a very nice year for us. Because with credit spreads, you're not in very long. You're in and you're out. You can take advantage of more shorter term moves. I wasn't quite nimble enough to get in and do some bear calls on, when the market was dropping like crazy. The volatility was so high that I chose to just wait that period out. Took some early losses, chose to wait the period out, and then you can see, well, the volatility, the implied volatility and historical volatility is not down to where it was before, but it's starting to come down. We're not getting back to normal. I don't want to say that by any stretch of the imagination. We still want to be very cautious in this market, but you can see that we've rebounded nicely. And one of the big reasons is the financially strong stocks are ones that just bounce back. They've got the money to bounce back. Okay, stocks like Caterpillar. What effect is the coronavirus going to have on heavy machinery? Well, yeah, okay, people can't be making that heavy machinery, but once that goes away and we get back to normal, there's going to be a lot of construction. Caterpillar is going to jump, and it's already jumping. Let's see, I have a question here, and you use the... Okay, good question. The question was, do I use the 20 for my stock purchases, buying and selling longer term, and a different list for my short-term trading? No, they're absolutely the same. And that's what I was trying to show you with the chart of Hershey. Hershey's a financially strong stock. It does quite well to buy and sell longer term, but you can really bang it with shorter term credit spreads and option trading. Absolutely. It's the same list. It's the same list. Okay, Trish, here's where I'm going to need your help. This is the URL that will take you to my YouTube. What I did is I've put together a 12-part series on how to properly trade options. And this address will take you to part 1. And I spent a lot of time in part 1 really digging into the regression channel, showing you how to put it on your charts. Part two is I go over the measured moves and the Fibonacci's in great detail. Then I talk about how to put it on your charts. Then I go through some actual trade examples from beginning to end. It's a dynamite series. It's everything I do. It's everything I do. Okay. So I've got 5 minutes left, and Trish says I can speak about give you a little sales pitch. So here you go. You ready? I'm gonna Trish, did you get that down? Can you put that in the chat box for everybody?
I did. If you want to forward it to me again when you're done, I'll put it in the chat again.
I can do that. Thank you very much. Okay, let me go over to my website real quick. And my website is www.optionsinfinity.com. Optionsinfinity.com. We're in our 10th year. We're not a fly-by-night outfit. Like I said, I've been trading for 35 plus years. I've been teaching now for 10. I love it. I've got a passion for this. I get a big kick out of working with people. When you go to the website, if you scroll down, you'll come to this portion of it, which is a PDF file, a blueprint basically of my 3 principal method of trading. It kind of gives you everything you're going to see in the 12-part YouTube series, but it's a little condensed. And I don't need your email. I don't need it. Just come onto the website and click on there and either view it or download it. It's there for you. See, I'm all about helping you guys to become a success. Okay, that's what I'm doing. A little bit about me, a little bit from my people. This is a cool little video talking about how does a mentor speed up your trading success. And I think a lot of people have heard the old adage that if you want to be a professional in anything, it's going to take you 10,000 hours. And that is really true. That's really true. But if you have a mentor that has, I calculated the other day, I've got over 28,000 hours doing this. And I can help you to speed this up, and this short little video will show you how to do that. But ultimately, if you like what you see, if you like what you hear, if you think this is for you, if you think this is something that you would like, I would love you to become a member. Members get, first of all, every time I see a trade, you get a text and an email alert. Now, once again, this is when I see a trade. I pick my very best trades. I don't bombard you with trades. When I see the very best trades, that's when I'm going to send you a text and email alert. I'm going to show you exactly what to do. I'm going to give you, buy to open this, sell to open this, when we exit, buy to close, sell to close. Okay. Okay. Question just coming in, and let me see what this one. Okay, Bill, good question. Is your regression channel for Forex as well? You bet. You bet. And I do credit spread for our webinars. I teach credit spreads. I teach and show you how to trade the stocks, and we also look at Forex. And I focus on the US dollar versus the Japanese yen. I know there's a lot of different pairings out there, but I just focus on one. But absolutely everything you're going to learn here is going to be applicable to Forex. It's going to be applicable to the futures market. Anything that has a price chart associated with it is applicable. And one of the things you get as a member is the entire master class suite. And there is a whole section on how to trade Forex. So you're basically going to look over my shoulder and watch me trade. And I'm going to send out the text and email alerts. You're going to get all the education on how to trade credit spreads, how to trade stocks, how to trade Forex. Okay. Then once a week at noon Eastern time, we get together as a community, and it's taught by me. I usually go over a lesson, then we talk about our trades, what I see in the future, and then we open it up for questions. And there's always great questions. I want to make sure that everybody is on board, that no questions are left unanswered. Okay. And so I think it's a great opportunity to earn while you learn. Earn while you learn. Okay. Once again, that website is www.optionsinfinity. And Trish, I will send you an email with that URL. And with that, I am finished.